So no, they don't. Typically, women invest less than men. So if we look at ISA statistics, they're quite a good gauge of this. Women are more likely to have an ISA, but they're more likely to have their money in cash and in a cash ISA than in a stocks and shares ISA. So 80% of women will have a cash ISA compared to 72% of men, but only 17% of women will have a stocks and shares ISA compared to almost a quarter of men. So there's lots of reasons, and it's quite hard to pinpoint just one. One of the reasons that's often given is women typically don't like to take as much risk as men on average. So they're happier leaving their money in cash, which is more of a safe haven, than taking risk with it and investing. Part of the reason also is they have less disposable money on average. So the gender pay gap still exists, and on average women will earn 9% less than men, which means that they just put simply have less money available at the end of the month to save and less money that they're willing to take risk with and invest. But also the investment industry and fund management particularly is still quite a boys' club. So some research that was done by Morningstar of large asset managers found that only around 14% of fund managers are women, and if you look at managers that run a portfolio by themselves rather than running it as part of a team or a co-manager structure, only 7% are women. So it becomes a circular thing where fewer women are represented in the industry, so it seems like it's not very accessible for women, but likewise, because women aren't investing at younger ages, they don't necessarily see that moving into the city and fund management is always the clearest option for them in career-wise. So put bluntly, it means that women have smaller pension pots than men. So men on average have 11% more in their pension pot than women. And then when we look at the at retirement age group, so those that are 55 to 64, men have almost double the size of pension pot than women do. And so there's a lot of different factors into this. If you've got a lower salary across your lifetime, then you're going to be putting less away into your pension. But we also have looked particularly at the impact on career gaps and that they have. So typically women taking breaks to have children, so whether that's a year off or whether that's a 5-year break to have kids, or whether it's taking a break but then returning to work part-time, and the impact of those gaps and not contributing to your pension in that time, and also not having employer contributions in your pension on that time, can have a dramatic impact over that long period of time that the pension money would be invested.
Solve this?
So I think we're in a really good space at the moment. There's lots different finance companies are doing, not just on investing, but just broader personal finance, getting women, but not just women, more first timers as well, involved in talking about money, thinking about money, and thinking about all aspects of finance. So we've had the launch of quite a few books, particularly aimed at millennials, tackling their finances and talking about that. At an even younger age, we've had more initiatives in schools to start financial education at a younger age. But there's also a lot of events around investing specifically, first-time investors, getting people into that, and we've seen some campaigns. I think the difficulty is that some companies have launched campaigns and they haven't gone down as well, so it's quite careful treading for companies in this space to get the tone right and to get the message right so that they actually engage with that customer base rather than putting them off.